Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. If you like what I'm doing, please consider subscribing, give a thumbs up. It really helps out the channel, pushes the YouTube algorithm, and spreads my channel to other people. Check out my other videos. I do a lot of videos about money and finance, so please check out the other videos. All right, let's get started. Today, we're going to talk about my list of stocks that I'm watching, my watch list. I made a separate video probably a few days ago, basically about what's going on in the market right now. The market is in fantasy land. I believe there's no reason why stocks should be going up. As of this recording, the Dow is actually down, I think, roughly 500 points today. But overall, the Dow is only down roughly 10 to 12% for the whole year. And there's just the worst thing. A black swan event happened. The whole global economy is shut down, and the Dow is only down roughly 10 to 12%. And that just doesn't make sense, right? Comparing that to what happened in 2007, 2008, the financial crisis. Stocks were down roughly 50% from peak to trough. It took about 18 months for the stock market to crash, and it crashed just a slow burn, and it was down 50% when everything was said and done. So I feel that we have a double dip recession coming. We're going to have another stock market crash as soon as Q1, Q2 numbers get reported by all the other companies. As soon as we kind of start slowly reopen the economy and people start to realize, hey, we're not doing 100% revenue like we did before. Probably down to 60%, 40%, whatever it is. It's not going to be like it was pre-virus crisis, right? So as soon as that kind of smacks people in the face and people realize that the economy is not just going to bounce back like like nothing happened. Some businesses are gone and gone forever. Some businesses are not gonna ramp until probably 6 months, 12 months, however long it takes. So that's why I really do think that there is going to be a prolonged recession, at least 6 to 12 months. Once these numbers starts coming in, once people get smacked in the face and realize there is a big problem. One big key that just happened today, again, oil prices have dropped now to the negatives for the first time ever in history, I believe. Oil prices are in the negative. So essentially, these companies have so much oil they don't know what to do with it, and it's not even worth selling. Pretty much, it's not even worth transporting because you're not even going to get money. You're losing money by producing this oil. So actually, it is down. Right now, it is negative $34.88 a barrel. So this speaks for itself, right? Oil is worthless right now. So that is a huge issue. The whole global economy is down, obviously. So this continued issue is going to be exacerbated when, like I said, quarterly numbers come out. People try to get back to work and they find that they can't. The job is not there. The customers are not there anymore. So what I've said in the previous video is now is not the time to be investing. Now is not the time to be putting money into the market. That was to be done last month. That was to be done in February, in March, when everything was on sale. The prices were rock bottom prices on really good, really strong companies. Like I said, Tesla dropped into the lower or upper 300s. I think it hit 380 or 390. Like Uber was down to $15 or $14, $15. Disney was down to, I believe, upper 90s. I'm sorry, lower 90s or upper 80s. So like all these great companies were massively on sale, massively discounted. But now stocks are going back up, and things are pretty much overpriced, in my opinion. I'm not going to buy something that I was buying for $80 2 months ago or 1 month ago. I'm not going to buy it when it's over 100 now. So what you should be doing now is putting your money aside, wait for the next recession. I really believe that it's going to be coming, so just be patient. Wait for that recession to put some money into the market and make a watch list. Do some research on companies that you love, companies that you understand, and make a watch list so that way you could keep up with these companies. So today we're going to go over my personal watch list, companies that I'm interested in. The first three, there are no in particular order. Just the first three are three that I do not currently own, but I'm really interested in it. And the rest I do currently own either in my public account or in one of my other accounts. So let's get started. Number one is Square. I talked about Square last month in the April I believe it's the 5 picks for April. Square, they are a payment processor. You know them from, connecting the little device onto your phone and you can swipe credit cards. If you go to like mom and pop shops, small businesses, a lot of the small businesses use Square for their cash registers, for their software. And they are expanding into even larger businesses. They also have the Cash App, which is their competitor for Venmo and PayPal. Their Cash App is really interesting to me because you could not only transfer money in between other people, but they are looking into transferring money to other countries, essentially to send money to whatever country and kind of avoid the transfer fee. So also you could sell stocks, buy stocks on the platform. You could also buy cryptocurrency on the platform. So they are trying to integrate basically all of financial services into one app. I see if they are successful with that, they are probably going to be a major competitor to kind of Venmo and PayPal, which are probably the number 1 and number 2 players in that area. So Square, I'm really interested in. If it dips down into the 40s or into the 30s, if it dips down into the 30s, I will be buying heavily into Square. Right now, Square is trading at roughly $61. I mean, it was trading at in the mid 40s just last month, and all small businesses are pretty much closed, and I don't see why Square has jumped up to the 60s now. But nonetheless, if Square takes a dip, and I do believe that they will, because like I said again, when small businesses open back up and they see the revenue is not there, they are going to get a hit, and I think their stock will dip down back into the lower 40s, if not into the 30s. So Square, again, I'm interested in them if they are dipping down into the 30s and 40s. Number 2, Activision Blizzard. Activision Blizzard is probably the biggest player in the gaming space. They have top brands like Call of Duty, Candy Crush, I think Grand Theft Auto as well. So Call of Duty obviously is a stay-at-home stock. A lot of people are staying at home. Basically all school is closed. So a lot of people are gaming. Netflix, gaming, Zoom, all these stay-at-home stocks are seeing a good jump in their stock price. So Activision Blizzard, they also have like a World of Warcraft and various titles under their umbrella. So Activision Blizzard is trading right now around $66. If Activision Blizzard dips down into the 40s, I would definitely be picking up Activision Blizzard. Honestly, I don't think it'll dip down into the 40s. Just because it is a pretty strong stock for the current environment, the current situation. Back in March, it kind of dipped down into I think in the lower 50s or upper 40s. But for it to dip down into like the lower 40s and the 30s, where I'm really interested in picking up shares, I don't see that happening unless the second crash is a lot worse than the first crash. So again, Activision Blizzard, really interested in it if it dips down into the lower 40s. Number three is Qualcomm QCOM. Qualcomm is probably the biggest player when it comes to 5G. So basically 5G is the next revolution off of 4G. High-speed internet, mobile internet. You're going to start being able to stream 4K video, mobile-to-mobile communication, vehicle-to-vehicle communication for smart cars and driving, connected cities. All that kind of stuff is going to require 5G, high-speed throughput, high bandwidth devices, and 5G connection, essentially. So I do believe in the autonomous driving, and so all vehicles produced in the next 5 to 7 years, in the smart vehicle space, will have connectivity. Will have internet. So when vehicles are driving autonomously, they will be communicating with other vehicles and also communicating back to the manufacturer, sending data, sending updates. So all that requires high-speed internet that is within the vehicle itself. It's not going to go through your phone anymore. So that's why I believe in 5G a lot, and one of the biggest players is Qualcomm. The other thing about Qualcomm is they have settled, or Apple and them have settled, like all lawsuits. They were in like lawsuits and court battles for a few years, but now they pretty much squashed all that. They all settled with that, and so they are basically back in bed together. So Qualcomm is going to be producing chips for the new iPhones, for the new iPads, for all of Apple's products. And so if you are obviously producing for one of the biggest cell phone and iPads and all that kind of stuff, you are obviously going to be making good revenue. So Qualcomm, it is currently trading for roughly $76. I'm very interested in Qualcomm if it dips down into the 50s. So if it dips down into the 50s, I'm definitely interested. I'll be picking up shares of Qualcomm again if it dips down into the 50s. All right, number 4. So those first 3 I do not own currently, but I'm really interested in it, and they are on my watch list. The rest of these I all own either in my public account or in one of my other accounts. So first one is Peloton. Peloton also showed up in my last video of April, the 5 stocks for April. I'm really interested in Peloton. I do own a small share or small position in Peloton. I started picking them up, I believe, in December of last year, when the whole Christmas commercial debacle happened. Their stock took a little tumble. I picked up some shares then. Then with the whole illness 19 situation happening, I picked up some more shares. So Peloton I'm really interested in because again they are another stay-at-home stock with gyms pretty much all closed. People are wanting to exercise, so Peloton is that market. Their major product is their bicycle. So it's a connected bicycle. Essentially, you are able to stream classes that you have a subscription for, and you are able to stream classes and pretty much ride along with the entire class through streaming through the screen that is on the Peloton. Also, they have a treadmill that they just released. I think it was like last year or the year before. So they are expanding their products, and their subscriber base is pretty strong. Their churn rate is pretty low. I think it's like less than 1%. Their churn rate, that means like people that do not resubscribe to their subscription is less than 1%. So also a big thing about Peloton that I'm really interested in or really like is that they're OG. They are Kickstarter. They started on Kickstarter with the same crew, with the same CEO, and now fast forward, I think it's like probably like 10 years since Kickstarter days, and now they are a big player in the home exercise space. Number 5. All right, number 5 is Revolve. I talked about Revolve in a lot of my other videos. I'm really interested in Revolve. They are a mid to high end clothing company, but what sets them apart is like they are not doing traditional advertising. They don't do like magazines. They don't do television commercials, movie commercials. They don't do any of that, right? All they do is social influencing. So I think that is really the next generation of purchasers, of buyers. It's all about social influencing. It's all about the internet, Instagram, Facebook, YouTube. So if you look on Instagram, Revolve is essentially an Instagram company. They do all of their marketing through Instagram with their social influencers. So like some of these influencers have millions and millions of followers. And so that's where they do a lot of their advertising. So their advertising cost is traditionally not as high as other players in the market because social influencing is more profitable. It's profitable for the influencers, and it's profitable for the company as well. So Revolve again also has a pretty good balance sheet. That's why I'm still interested in Revolve. If Revolve dips down into the $8 range, so right now it's trading for roughly $11 to $12. If Revolve dips down to the into the $7 or $8 range, I'll definitely be picking up more shares of Revolve, adding to my position. All right, number 6. Number 6 is Uber. I started with Uber when I first started picking up stocks and starting this channel. Uber was one of my first picks. So Uber, obviously, I don't have to explain Uber. They are a rideshare company. Obviously, their revenue is hurting because the economy is shut down. People don't need to go downtown. People don't need a ride to work. People don't need a ride to school. So obviously, their market is hurting. They are making a little bit of profit. They're actually making a decent amount of profit, actually. Well, not profit, but revenue in their Uber Eats because restaurants are still open and Uber Eats delivers food from their restaurants. But of course, their main market is ride sharing, and that market is down. But when the economy does open back up, and of course it will, it's just not going to last forever. When the economy does open back up, basically Uber will open back up, and Uber's goal is to be profitable. That is their eye. That's what they have their eye on the prize, is to get profitable. So right now they are not profitable, but they have projected profitability in 2020. But we'll see if that happens. With this whole illness 19 situation, possibly profitability will not happen until 2021, maybe 2022. But as compared to Lyft, I see Uber being profitable much faster. I don't even see Lyft being profitable in the near future. So Uber, I'm really interested in. Right now it's trading for roughly $28. I'm really interested in Uber if it dips down into the low 20s. Just last month, the lowest price, I believe it was like 14 or maybe 13 or $14. That was its rock bottom. If it ever hits down into the teens, definitely I will be picking up tons of shares of Uber. All right, next one is Tesla. I'm not even sure what number we're on, but anyway, Tesla, definitely bullish on Tesla. They are my number one pick. They are my biggest holding. Tesla is trading for roughly $750 currently. I made a whole video about Tesla, why I think they will be able to break $1,000 if the economy doesn't crash. So if the market kind of stays the way it is right now, if the Dow stays roughly where it is now, in the in the lower 20,000s, I do see Tesla breaking at least 900, if not 1,000, after their Q1 numbers are reported. Their Q1 numbers are going to be positive. They are going to be higher than their Q1 numbers of last year. They sold roughly 25,000 more vehicles than they did Q1 of 2019. So their numbers are going to beat Q1 2019 numbers. So, and also the ramp of the Shanghai factory, their profitability coming out of Shanghai, the profit margin is definitely going to be higher than what they had previously. Things are just cheaper in China. Labor is cheaper. Materials are cheaper. So their profit margin is going to be bigger in China. So I do see a really big increase on their profitability for Q1 2020. Plus, when they talk about their battery technology, what their plan is for their next generation battery, what their plan is to scale battery production. If those plans are reasonable and understandable, I think they are going to break $1,000 for their shares. That is if the stock market does not crash. If the stock market stays relatively at the level it is today, I do see Tesla busting through $1,000. So I am definitely interested in Tesla if it dips into the 400s. The lowest, again, it was about 380 during, I think, March. If it ever dips down into the 300s, I will be selling everything to pick up more shares of Tesla. So that is Tesla. Next one is NVIDIA. I'm sorry, I don't even know what number we're on now. But anyways, next one is NVIDIA. I have NVIDIA shares in one of my accounts as well. I was purchasing NVIDIA shares when it was roughly in the lower 200s. Now it is 292. So if NVIDIA ever dips down into the upper 100s, like the 190 or 180, if it's at 180, I will definitely be picking up tons of shares of NVIDIA, as much as I could get my hands on. I am very bullish on NVIDIA because they are the number one player as far as graphic chips come. Video gaming graphics chips, computer graphics chips. They are pretty much the biggest player in that space, but they also do a lot in augmented reality and virtual reality, which I do see coming down in the future. Also, they are in the self-driving space. Again, self-driving, I'm very bullish about self-driving. So they used to make chips for Tesla. They were doing their self-driving chips until Tesla started producing their own chips. So they do have a lot of experience in self-driving chips for auto manufacturers. So there's basically two players in the self-driving space as far as the chips go. It'll be Tesla, number one, and number two is NVIDIA. Pretty much, if you're not using a Tesla chip, you're using an NVIDIA chip. So all other car manufacturers, if they're going to be serious about surviving, and when other vehicles are driving themselves, no one's going to want to buy a dumb vehicle. Everyone wants to buy the smartphone. No one wants to buy a dumb phone. Everyone's going to want to buy a smart car. No one's going to want to buy a dumb car. So when that transition comes, GM, Ford, they have no experience in making chips. They don't make chips. That's not what they do. They don't do self-driving. So they're going to have to partner with somebody. And are you going to partner with your biggest competitor, Tesla, or are you going to partner with a chip manufacturer, which is NVIDIA? So that's why I'm really bullish about NVIDIA. Again, if their stock dips down into the lower 200s, if it dips down into the 190s, definitely be picking up shares of NVIDIA. Next one is Disney. Picked up Disney when it was dropping. I picked it up in the lower 100s, and I picked it up when it was down in the 90s and even down into the 80s. I believe Disney dropped to roughly $85. I think was the lowest point that it hit just pretty much last month. Right now it's trading for about $106 per share. So obviously all their theme parks are closed. No sports are going on. So ESPN is basically not doing anything. So all that's going to come back. It's not like you didn't go to Disney this year and you're never going to go. When everything blows over, you're going to make that trip to Disneyland. They're going to make their revenue off of you eventually. If they don't do it now, they will in the future. Also, obviously, the NFL, NBA is going to come back. Major League Baseball is going to come back. When that happens, ESPN will be ramping up again. And so all this is kind of short term. So if things dip again, if Disney dips down into the 80s again, I'm definitely interested in picking up more shares of Disney. After all, Disney is not going anywhere. They're a huge corporation. They just own so much. So I'm definitely interested in Disney. And so that was number 9. Coming to my last one, number 10 is e.l.f. Cosmetics. So e.l.f. Cosmetics, I don't think I talked much about e.l.f. Cosmetics, but I'm interested in e.l.f. Cosmetics if it ever dips down into the $8 and $7 range. Right now, e.l.f. is trading at roughly $10.39. I was picking up e.l.f. I believe my cost basis is around $8. Again, if it dips down into $8, and definitely if it dips down into $7, I'll be picking up e.l.f. So e.l.f. again is a cosmetics company. So women like to look beautiful. Women like to wear makeup. So it's not like this whole recession happens. People are gonna be like, I'm not gonna buy makeup anymore. I'm not gonna wear makeup anymore. That's just not realistic. That's not gonna happen. What's more realistic is I might not buy that $200 Estee Lauder stuff. I might, bring down my cost and, purchase something for like $25, $30 from e.l.f. So e.l.f. is lower cost, but their quality is still pretty good. So e.l.f. was trading at roughly $20 range before this whole illness 19 happened, and they dipped down into like $8 or $7, $8 range. So definitely if e.l.f. drops down into the $7, $8 range, I will be picking up more shares of e.l.f. And that is my watch list, guys. Let me know if you agree with my list. Let me know if you have some of the same stocks in your list. Let me know what other things that you're interested in or what's on your guys' watch list. Check out my other videos. If you like what I'm doing, please give a thumbs up. It's free to you. Come on, give a thumbs up. Helps out the channel, really pushes the YouTube algorithm, spreads my channel to other people. I'm trying to grow this channel. Roughly I have 80 something subscribers now. Let's try to see if I can break 100 in the next few weeks. Really helps out. I really appreciate you guys. Please give a thumbs up again. Consider subscribing if you haven't yet already. And catch you in the next one. Peace.